Morning. So today is going to be an interesting session. It's we have 1 hour to talk about what we did not talk last week. We started the conversation about the Fed and how criminal some of the actions of the Fed are potentially for the U.S. economy and for the world. My name is Peter Borvik. I'm the co-founder of Wernick AI. We do AI analytics for cryptocurrencies, and with me we have Jeffrey Wernick. So Jeff will pretty much Jeff, you'll introduce yourself possibly, right? But Jeff is one of the earliest investors in crypto, in Bitcoin, huge investor and proponent of gold as well. Has very interesting investing philosophy, and that's what we'd like to learn today. So I'm the only one sharing my face. So I'll try to make a very, thoughtful face while listening to Jeff's insights. And we also will try to share some screen. So Jeff, would you please introduce yourself to everybody? And I'm also going to be watching you guys putting your questions in the chat. So if you do have some interesting questions, we'll try to do it today.
Well, I'm Jeffrey Wernick. I'm basically a private investor. I was a young entrepreneur. I started my first business. Well, I actually started buying. I started trading when I was a student at the University of Chicago. I traded futures and options, really into derivatives, and that was in the mid '70s. I took some of my profits in the mid '70s and started buying real estate in New York. That was sort of like serendipitous because when New York had its fiscal crisis, where they created this municipal acceptance corporation run by Felix Rohatyn to deal with the bankruptcy of New York City and restructure of debt. The Congress hired a University of Chicago sociologist, Terry Nichols Clark, to do a study on fiscal crises in major urban areas. I did a little of the econometric background, grunt work on it. So in my effort to understand the problem, I started studying municipal finance. Being a New Yorker, I was mostly interested in New York, and as I began to get some understanding of fiscal crises, I thought that that was about the point of time when there were like later the movies of Escape from New York or something with Kurt Russell. Where Manhattan was like a prison, so they had the urban flight.
Great
time.
So
I thought urban flight would return back to New York, and it was just a matter of time. And then once the city stopped overtaxing and responded to having reasonable fiscal policies, that New York would return to being even better than it was. And so. Since I had some fortune trading, I was taking 50% of my trading profits and monthly just buying real estate at foreclosure auctions. Most of it happened to have been in Soho and downtown areas. So in the mid '70s, I also got into the real estate business, mostly just because I was just buying things on foreclosure. I was buying tax liens. So I learned all this stuff just because I had the opportunity of studying municipal finance, because I got to have some sort of peripheral involvement, in this study, and so I became, enough of an expert to make myself dangerous. So I had some, fortunate luck in investing young, when my interest had always been in and I really liked to understand the pricing of risk. So I built a risk management company, and I sold my risk management company after a couple of years. That gave me more capital than to trade, and basically I've just been a private investor ever since then. But having studied from the University of Chicago, and remembered conversations I've had with people like Hayek and Friedman and Stigler and Ronald Coase, you learned about how government regulation and just about anything government does perverts markets. So then I became, as a thing is, what type of rules the government will do that will pervert a market, how will it pervert the market, and what will be the consequences of that, and at what point can the government continue to pervert the markets, where at the end the markets fight back through arbitrage. So, and how do you build technology to arbitrage what the governments do that will pervert markets? And so that was basically the type of things, that I looked for. I can give some simple examples.
Let's actually do the example right here. So what's happening with the S&P 500 right now? What are they trying to do? What is the arbitrage that is in place?
If you look at Japan as a parallel, right now, I think I saw some article in Zero Hedge the other day that the Bank of Japan owns about 80% of the ETFs in Japan. So the question is who becomes the market now? So I think that the only game in town that the Fed has and has had for a number of years, in the past, what could the Fed do? The Fed could say, you know what, I'll keep interest rates low. I'll subsidize companies going out and purchasing their own stock to push the stock market up. So what you saw was a deterioration in credit quality, but you saw a rise in stock prices. So it was like using financial engineering, to sort of debase that and transfer that value to shareholders. And that stocks became more and more option-like. So in the sense that they're more levered, they behave more like an option that's near the money or at the money as opposed to deep in the money, which increases their volatility. So I think right now what you're seeing is, given the fact that the economy is in such bad shape and the Fed wants to figure out how it can sustain consumption, because they don't care about savings and investment, they only care about consumption to produce GDP growth, which is basically a lot of malinvestment, because we're penalizing future growth and future consumption to overborrow now to stimulate current consumption to prevent a complete collapse. So one of the things is, Friedman and Tobin's work on our consumption function as opposed to Keynes was that we don't consume just income, we consume wealth. So the Fed can't change people's income. What they can do is change people's wealth. So all the incentives the Fed has is they can't drive, and Powell's pretty much said this. Powell's has said right now that he would like to see more fiscal action. So he would like, and I'm not agreeing with what Powell said, but this is a Keynesian mentality that says, maybe we're in somewhat of a Keynesian liquidity trap as they perceive it, and without fiscal action to stimulate demand, all they can do is push asset prices up. So that's what they're doing, is they're pushing asset prices up.
Is that a long-term? Is it a long-term play? For how long will that? For how long that trend will continue, and when it will end, from the perspective of private organizations, jumping back into the market and trying to participate in this action as well?
I don't know how much longer the market will accept the Fed's credibility. So far, they have, and I don't think we're near the end game of the Fed continuing to be able to intervene directly in capital markets. They've been given more tools now to intervene directly as opposed to indirectly the way they were doing previously. And I think what we get is clever and cleverer rules on how the Fed can more directly impact asset prices. So, and they become smarter and better at it.
And has it happened? It's pretty. It's pretty unprecedented from my personal view. I'm still pretty young, so did not see too many crises and recessions. I did not see the 1984, 1987. Did not experience that. But were similar unprecedented measures ever taken by the Fed previously, in terms of pouring so much amount of capital, printed capital into the market?
We've never seen anything like this, and it's had a perverse effect not only on pricing, but you have to not just look at the indices. You have to look at the stocks inside the indices. One is, if you take a look at national income account data, corporate profits have been flat for 6 years now. And that's assuming all the accounting gimmicks they're using to try and make earnings look better than they probably really are. So corporate performance has not been really very good. Then you see this year, as you know, even more so than last year, the continued decoupling of a few stocks from everything else. You've seen that the FANG stocks, which are up on the year, and then the rest of the S&P is down on the year. So the perverse thing that this is doing, because of the impact financial engineering has to capital structure and the mispricing of capital structure has had, is if you have a really low cost of capital, you can create a more market dominant position and you become less contestable. So we're seeing the concentration of wealth, and economic power. Like right now, I think I saw the latest number of the top five stocks there: the Facebook, Amazon, Apple, Microsoft, and Google. They now represent about 21%, of the total value of the S&P 500. About 4 years ago, they were about 13%. So that's a huge increase in their percentage participation. So they're accumulating a lot of economic power. What will this do to the future growth of the economy to have a few firms have such market power while the overall economy is doing so poorly? This is going to stunt the economic growth for a long period of time. It's kind of a weird thing that we're now seeing as our permanent, while the stock prices are going up, we're probably seeing a decline in our permanent income because the projected path of economic growth is going to be less because of the false inducement created by the Fed participation and how we allocate capital. We're only allocating it to make the strong strongest. And then what's the consequences of just making the strong even strongest at the expense of discouraging new entry into and innovation into markets? So this is a very serious problem.
Couple of questions here right away. So first of all, I mean, who is behind such insane growth of those five stocks? I mean, again, pretty unprecedented. And if you believe in some kind of, some kind of theories, potentially not very real, potentially theoretical, are certain governments behind those five stocks in particular?
I assume the governments are partners in this, and I will tell you why I believe that. Mm-hmm. One is, if you've noticed, if you think about what I think few people, if anyone, has pointed out, we've had basically from these tech firms, that control the flow of information, whether it's Google, Apple, search results, whether it's Facebook or Twitter, all that are in the transmission of information.
Data business, yes.
And where we get the data business. One is, in a world where more activity has now gone digital, the value of their ability to data rape everybody has increased dramatically. Okay, so since we forced everybody out of going to a store and shopping anywhere, and we forced everybody online, okay, it's not just the sales that are going up, it's the value of the data rape that's going up. So what are we doing? We're tracing everyone, we're tracking everyone. So we all say it's to keep us safe, to keep us secure for our health, and whatever bullshit they say. But really, look at this in the context of several things. Why, when Google goes out and says, we only want to put on what the World Health Organization says, and or Fauci says, which means that you should stay in lockdown. Okay, and anyone who says you shouldn't be in lockdown, of course they want us locked down, because as long as we're locked down, we're in their world. Okay, so they want us out of the real world into the digital world. So the best way to force us into the digital world, is to keep the lockdown as long as possible. So we're spending all our lives in their world. Okay.
With the protest, with the corona.
Mm-hmm. Excuse me.
With the corona, with the protest. I mean, to me, it sounded extremely dubious how corona was followed by completely unreasonable protests, especially here in New York City. I mean, things got shattered literally, like within 2 blocks of where I am. And again, right after the protests, people are sitting home again.
Yeah, if you're protesting to get back to work, then if you're back at work, you're not online streaming something or doing searches or doing something where they can track you all the time. Also, during this period of time is also when a judge validated a consent agreement between Apple and the government, Facebook and the government, where basically Facebook said, I'm going to only pay a small fine for basically doing more data rape than I promised to do. And in return for the small fine that I'm paying, small fine in proportion to the value of the data that was raped, they agreed to let the government do warrantless searches on everyone. So it's very convenient now. All these companies, they're going in and saying, I want to search your search engines. I want to search everything about you. So they're proxies for the surveillance state for the government. So they help. So the government doesn't have to sit back and now go, we already learned bad enough that you can go lie and get a FISA warrant. So, but the problem is you can lie and get a FISA warrant and might get caught on it. So why even need a FISA warrant? Why not just sign consent decrees with all these companies, have them surveil you, and then just ask them, and then you don't need to go to court for a warrant. You go to the entities that are surveilling everyone and say, tell me everything I want to know about anyone I want to know, and I don't want to have to ask a warrant to get it from you. And this is what they're doing. So they're happy to see, I don't say this is an attack on Trump, but to someone who's looking for a statistic, that says the stock market's doing well, he's not a stupid person. I'm sure the administration of people who are not stupid people, and they understand that all the growth in the stock market are these stocks. So whatever they talk about, I want to break up Google, I want to do this, I want to do that, the value of the surveillance they're getting from these companies, and the value in terms of what would happen to the stock market if they challenge these companies. There is no incentive to do anything other than maybe hold a hearing and do something that's pure theater. But it's only theater to satisfy people who say, this is really bad what's going on, and do something. And so they pretend to do something because that's really what they're best at. And Jeff, they're best at pretending to do things. They don't really do anything. And you don't really want them doing anything. So
and Jeff, what's so bad about So let's assume the governments know everything, right, about us. When we take, when we take a piss, when we drink milk, when we go, eat our cookies or whatever. Like, what's so bad about this? So what if the government knows all this? So what if the government can know exactly what kind of toilet paper I would like to buy, what kind of novels I'm going to read? What's so bad about that from the surveillance perspective?
Well, for me, let's separate out the company from the government. With respect to the government first, as opposed to the data rapist company, data rapist company is taking what they learn about me and selling it. So I'm a product of the company, but I get no compensation for it. One of the reasons why, like when I wear clothing, I don't like to put a label on it. I don't like to put a label on it because, some people put a label on it because they want the status. I bought something at Louis Vuitton or something, so let me write a recognizable label because I'm trying to make a statement about myself. So some people put a label on to signal something about themselves, about their status, and whatever elitist reasons are. I look at it very different. If I'm putting a label on it, okay, so I'm advertising for it. So I'm not advertising for anything where I'm not getting paid. So if they're not going to pay me to wear their clothing, okay, and pay me what I think I'm worth to wear their clothing and have other people see me in that clothing and maybe buy it because they saw me in it, then I'm not going to pay them. So I would never be on a platform that's taking what they learn about me and profiting off me without my consent. So if Amazon or somebody wants to call me up and say, we're learning a lot about you, we'd like to sell it to some people, how can we split the profits of this? And these are the people we're selling it to, what do you think? Then I would say, okay, maybe I'll put information on, because how they're using it is something I think is valuable and I feel I'm getting compensated for it. So then I would consider doing it, but it's still my property. My data is my property. My personhood is my property. Nobody can monetize it, okay, where they assume all the value but none of the liability. That's completely perverse, where if I put up content, I'm liable for the content, but they're exclusively monetizing it while I preserve all the liability associated with it. That's a completely perverse concept. With respect to the government, the issue is just very simple. the Bill of Rights. Okay, the government, the only thing the government has to know about us by law really is through our tax returns, nothing else. So they're not entitled to know anything. We don't have a system where every day you have to prove you're innocent, okay? And you have to think that I'm not doing anything wrong, so I have nothing to hide. No, why? The government, we created a government that doesn't have those rights. That's why we have a Fourth Amendment. One of the first things in the Fourth Amendment is the intrusion is regarding your papers. So that was the purpose of the Fourth Amendment. So then what happened? We created a Patriot Act that said everybody is a potential terrorist. So we have to treat everyone as a potential terrorist. And every day, don't worry, because if you're not a terrorist, you have nothing to worry about. So the government doesn't have the right to do this. So just very simple. It's not that whether I have something to hide. It's just none of their fucking business. So if it's none of their fucking business, they can't take it from me. It's just none of their fucking business. That's it. I don't need any other reason to the fact that I have the right to say, according to the Bill of Rights, it's none of your fucking business. So I have that right, okay? I want to exercise that right. It's none of their fucking business, okay?
That makes a lot of sense. So this whole hashtag legalize privacy.
Exactly.
Oh my goodness. All right. So what about
this was a bit. If we think about the type of things, look at the people read the Declaration of Independence. What do we complain about? We complained about, one of the complaints was the British in some houses were quartering soldiers. So people's houses were violated, by having to house soldiers. Now you have surveillance devices in your house, okay, watching you all the time, and the government can get access to everything. Call up Google and say, I have my Nest cameras in my house. Let me know who's visiting your house and let you know all the activities in your house. Just give me access to all the new Nest cameras or whoever's cameras. I want to listen to Alexa. I want to listen to the HomePod of Apple, or Google's, home device, and they're listening all the time to you. They have to listen to you, because other than they're not listening to you, how can they recognize your commands? So the certain command prompts them to answer you, but that doesn't mean they're not always listening to you. We have evidence that they're always listening to you. So
it's weird how in some countries it's the governments, like say Russia, back in the days, it's the governments who just openly said, okay, we gotta put surveillance against over you, and here they're trying to. In the U.S. and the European Union, they're trying to kind of go around this and trying to involve corporations to do the same exact thing, and funding those corporations crazily, creating all kinds of dreams for young entrepreneurs, whatever, to do the same thing. But in reality, it's pure partnerships between corporations and governments to do exactly the same thing with surveillance. That would kind of pisses me off a lot.
These are agents that now they can get around the need to get warrants. So they're trying to build a surveillance society so they no longer ever have to go to a court again to get a warrant on anyone. So they love these companies. They want everybody doing everything on these companies, because the more we transact on these companies, okay, the more that they can know anything they want to know about us without having to ask any court whatsoever.
Absolutely. So
the government is driving companies that are then data raping us. And then while the companies are data raping us, the government is violating our privacy and our constitutional protections. And our constitutional protections were designed to protect us against the government, not from the government to use them against us. This is so absurd. It's so absurd when people think about it, is that the whole point of the Bill of Rights and the whole structure of what the founding documents was, we had to have some level of centralized government, okay, some level of it, but we had to structure it in a way that's why the Bill of Rights existed, is that so the powers of government were enumerated, limited, specific, okay, and that everything else is ours. So they can't be taken away of it. That's what inalienable rights is, okay? No legitimate government can take it away. If not, there are no inalienable rights. Okay, then they're just privileges the government temporarily grant us. So what are we, a society? Are we a society of people living under whatever privileges the government allow us to have at any point in time? Or do we have any inalienable rights that no government has the right to take away from us. So when I read the documents, the founding documents, we have inalienable rights and no government is legitimate that takes them away from us. So for me, we have an illegitimate government. This is not just, I'm not talking about the current president, I'm talking about government in general. It's not a partisan thing. It's not a Republican thing. It's not a Democratic thing. Bipartisan, on a bipartisan basis, they've eroded all our civil liberties. So, and now they make us happy with thinking that our rights are privileges. So no, they aren't. They're our rights.
So let's actually switch it up a little bit. So, I mean, talking about the governments and stuff like that. So, I mean, clearly all systems, all structures are inefficient and they're imperfect. So that's why they're failing all the time, especially when those systems are created by a group of people to control the other group of people, a larger group of people. So your famous bet against the government, what will that include in these times? So it's potential precious metals, it's potential cryptocurrencies, Bitcoin, maybe Ethereum. What's your take on that? What can an average
Bitcoin
person
and
do?
gold. Bitcoin and gold. Bitcoin and gold.
Bitcoin
Forget
gold.
everything else. Bitcoin and gold.
No silver, no.
Forget everything else. Silver's not bad. Also, I prefer gold to silver. You know, generally, if you own physical, avoid counterparty risk. Okay, got to assume that almost anybody you're doing business with, that's reporting information back to the government, where they're letting you, where they're basically telling where to find whatever you have. Try and hold everything that you own yourself. Okay, have your own wallets, have your own storage for your own gold, your own silver. Hold the physical. Don't hold paper. Don't trust counterparty risk. We're more fragile now than. I'll tell you this story. I had my lawyer speaking with Goldman Sachs because I was interested in doing the same trade that Paulson and others did. The big short trade with the collateralized default swaps, credit default swaps, and
CDS.
And so I sent my lawyer in to meet with some of the people at Goldman Sachs and a couple of other banks, and I said to them, I want you to be able to demonstrate to me that the day you need to pay me out, that you're still solvent. Okay, so they laughed. And they said, okay. First they laughed and didn't take it seriously because I basically was trying to argue with respect to, I argued for two things. One is I didn't want them to use a formula on whether I was in or out of the money that they were determining at that point in time. I wanted them to use the formula at the time we structured the deal and keep that formula constant, which they didn't want to do. So they wanted to have the discretion to fuck me.
And was that, when was that, Jeff? When was that?
It's about 2 years before, because I started selling all my real estate in 2005, 2006.
Understood.
I sold all my real estate. So I used to have pretty extensive real estate holdings and everything that's not in my pension. I sold in 2005, 2006. So in that 2 year window, I actually I also wrote correspondence to to people at the Council of Economic Advisors, warning them that we were going to have a financial system collapse. And at that point in time, I estimated that the loss in the financial system was about $2 to $4 trillion. Just looking at call reports from banks. So I was looking at. So I wanted to make leveraged bets so I can make a shitload of money, but I'm very concerned about counterparty risk. So when I went to some of the firms, I started then not only arguing not only over the formula but the collateral they had to give me. So they didn't want to be collateralized. And I was demonstrating to them that my net worth was less fragile than their net worth. So because I had no leverage, they had a lot of leverage. So when I asked them to calculate under this scenario where they had to make this payout to me to prove that they had the capital to do it, at first they laughed, then they accepted to do it, and then they told me after that they didn't want my business, and they never showed it to me. So the reality was they understood that the day they had to pay me out, they would be insolvent and incapable of paying me out. So I think that right now, all the financial system is levered, and basically they're solvent because there's the expectation that they're too big to fail and the government will guarantee their liabilities. So we misallocate risk when some part of the sector gets allocated to credits where you understand that that the market is not correct, is not pricing the credit risk. The credit risk is being priced on the expectation that the government will bail you out. So that cost of capital is a subsidized cost of capital, because without the expectation of a bailout. So you and I, we don't have that type of cost of capital where if we fail, the government bails us out.
Absolutely.
We're going to be responsible for it. So think about the edge. If you're heavily levered and your cost of debt is so low because people will lend to you with the expectation that you are basically treasury risk because there's no way the government will let you fail. So think about how much cost of capital advantage you have over anyone else. And then we think about why so much of the economy is concentrated in the hands of so few, because the cost of capital differences are so great that it doesn't mean if I'm the best person managing an asset, it doesn't mean I'm going to get that asset. If somebody has a significant cost of capital advantage over me, they're going to get it. And right now, the cost of capital advantages to size is huge. So it's not like I have, if I'm 10% better than somebody else, if they're huge and have a lower cost of capital, 10% being 10% better doesn't get me the deal. Okay, being 20% better doesn't get me the deal. I have to be like 30, 40% better. So if everyone who wants to compete with the biggest has to be 30, 40% better, how much economic value you think we're losing as a society, that the people who are controlling assets are not the ones that necessarily can extract the most value from it. They could just finance it much, much cheaper than anyone else. So the whole market is now predicated upon assets being controlled by people who could just finance them the best. Okay? So this is why we have the type of inequality we exist. And this is all produced by the Fed.
100%. I mean, that's pretty much the same discussion we had last week, where we had two traders who are still in the business. And I mean, one thing that I did not say, but I was supposed to say that, we spoke about financial innovations. And there was a gentleman, Ari, and he said, well, the financial markets really evolved and we have all kinds of derivatives and all this stuff. To my point of view, the greatest financial innovation is still the ATM in 1960s, and potentially credit card that kind of digitalized cash and made it, potentially more convenient for the governments to, as you mentioned, fuck us over even more down the road. What's your take on that?
The credit card was a terrible innovation. What did we have? It's interesting. There's one of the guy. I don't know if he's back at the University of Chicago. He was for a short time. He was chief economist of the IMF, and he was the head of the Central Bank of India. Raghuram Rajan. Raghuram Rajan gave a talk. I don't know if it was at the Jackson Hole or at some conference. Where he basically said, because incomes have stagnated, what the government has done to help people feel better off is made it easier for them to buy stuff. So we're subsidizing consumption by making people debt slaves so that they don't feel worse off. So instead of people before being able to live a good life, put 10 to 20% in savings, accumulate capital through the power of compound interest, and make themselves wealthy that way, okay? Now what happens is, because incomes had stagnated and interest rates were kept too low through financial repression, okay, so your purchasing power of your money was declining, and the value of compound interest was actually working against you, making you poorer, because there was so much financial repression, that basically your interest rates were not covering inflation. And not only that, you're being taxed on nominal income that has negative real income, yet you're still being taxed on it. So the whole system was, how do we subsidize consumption, so we make people feel better off? And so he said, this is very fragile and it's going to fail. Actually, after the crisis of the Great Recession, his talk disappeared for like a year. You couldn't find it on the internet. He also wrote a book, I forget the title of the book, that kind of laid out the similar premise. So I think what has happened is because incomes have stagnated, government's incentive is to make people feel better off, because that way they stay in power longer. So they want to make people better off, and there's such a thing called a hyperbolic discount function. And I'll give you an example of a hyperbolic discount function. If you tell somebody I will give you $1 today or $2 tomorrow, most people will wait the extra day for the extra dollar. If you tell people I'll give you $1 today, or $100 a year from now, most people will take the dollar today. So over time, the longer you have to wait, the higher the discount rate is. So so from statistics, they call it a hyperbolic discount function. So because people have this hyperbolic discount function and they value being able to consume more today than deferring consumption, we don't save, we spend a lot, and the economy has become much more fragile. So this has been going on for a long time because wages have stagnated, and wages have stagnated a lot because we do malinvestment because the government interferes too much in the economy. Whatever the government does to interfere in the economy reduces economic growth. It reduces productivity. It reduces economic growth. Whatever the government does has bad consequences. Whatever it does. One day I did a negotiation for a friend of mine's business, and I was speaking to their business was represented by the United Steelworkers Union, and so I was explaining to them why they had to make concessions. So they were saying we haven't seen wage increases in several years. And I said, that's bullshit. You've seen wage increases several years. I said, your compensation's gone up. Your wages haven't gone up. And I said, why do you say your compensation's gone up? I said, one is I'm going to go through all the rules the government has imposed on the business that this company has to comply with. So these are costs the company has to pay to keep you employed. So let me go through you all, not the level of wages you see in your pocket, but how much the company is paying to keep you on the payroll. So your compensation is what the government is paying, is what the company is paying to keep you on the payroll. The difference between that and what you put in your pocket is not determined by the company, it's determined by the government, okay? So what happens is the government is taking a greater claim against your compensation, so your wages are being hit by it. So the company would rather not pay the government anything and give it all to you. So if you don't like the distribution of how much of your money, how much of your wage increases are going into these things, the government is saying the government is doing all this on your behalf because you're better off. So if you look at all the rules that the government is imposing on this business, okay, and you can determine whether the cost to the cost to the employer is worth it to you to have those benefits as opposed to the extra money in your pocket. The government is making this decision for you. They're not letting you opt out of these rules and take the money instead. Maybe that's what the government should do, is basically say every individual, this is how much the company is paying for that person, that every employee can get to opt out of those rules and take the difference between what the government is taking on their behalf. And then let's see what the market would decide on really what rules employees think are better off for them than the money they're paying the government to do all this shit. So, and I went through in great detail for them to understand that the company was paying more for them. It's just that the government was taking that money rather than allowing them to put it in their pocket. So I said that if you want to complain, go to the government to complain. Don't go to the company to complain. They'd rather give you all that money rather than give it to the government.
Then, Jeff, question. So what an average person should do in this situation? So an average person, first of all, must accumulate some amount of capital first, and then potentially bet against the government moves just like you did. But what an average person must do before he or she can accumulate that capital? How they should behave at this moment?
The most important capital to accumulate is human capital. So, the great thing about, Adam Smith's insights are we make ourselves valuable by understanding what other people's wants and needs are and figuring out how to satisfy them. So you got to be good at that. If you're not good at that, you shouldn't expect very much. So that's our role in life, is the more value we create for others, the more value we create for ourselves. That's what free market capitalism, free market economics is about. It's trying to figure out how we do something that other people value and develop the skills to do that. And the better we are at that, the more money we accumulate. If we're not good at that, we just got to figure out, what most people should do is really, they shouldn't vote for Democrats or Republicans. Try and find libertarian candidates, that want to abolish. They should vote for people that want to abolish the income tax
Yes.
and end the Fed. So if people want to accumulate wealth, okay, you're not going to accumulate wealth in a world ruled by Democrats or Republicans. Forget it, okay? So just not going to happen. So
So
if
pretty
people
much,
really trying to sit back and think about the future, you know, they got to start supporting candidates who want sound money and think that that taxation is theft. So our founding fathers thought taxation was theft, and I think that they were right. So government until 1913. You know, it's a pity that people don't study history. 1913, which was like the beginning of the onset of what people call the progressive era. What happened in 1913? We got the Fed, we got the income tax, and we got direct elections of senators. So before, states had a lot more power because the state legislatures chose who represented them in the Senate. So therefore, other states had very little influence over who represented them in the Senate, and the people then, the senator's job was to preserve the rights of the states. And the rights of the states' job was to check central power. So that was the whole point, was to have the tension between central government and local government. So to keep that tension as a check against central government. In 1930, the whole check and balance system got perverted. The government could print money, the government could tax, and now when you had direct elections of senators, now you've changed the incentive function of those senators. So that's why it was called the beginning of the progressive era. And we got to understand that that's the day capitalism died. 1913, capitalism ended in this country. So we want to start accumulating wealth again, real wealth. Okay, we got to return to capitalism, and by returning to capitalism, return to its roots. We got to have denationalized money. We got to abolish the income tax, and we have to decentralize authority.
So one of the questions, and I actually have the same question, is the question about private one. Tragedy of the commons can happen in private industry as well. How do we leverage human capital for humans? Is that just creating our own communes? Because I mean, how realistic is that to abolish this whole, this whole democratic slash Republican parties here in the U.S. or in any other country? It's very unlikely.
Well, I tell people that what they should do is just don't participate in the financial system. Buy gold, buy Bitcoin. If you take a look at the monetary aggregates, for example, we have M1 is basically what's called transaction balances. M2 is transaction balances plus time deposits and saving deposits. M2 is the monetary aggregate that's mostly used, that's referred to for monetary policy. M1 represents about 22% more or less of M2. So really, transaction balances is only a small percentage of the total of what we define as money, and as far as the monetary aggregate that people use. So if the only money we held in banks was M1 money, okay, we would then starve government. So I think that's what we have to do, is we have to starve government. And the way we starve government is starving the financial system. If we starve the financial system, and declare financial independence, then you'll know that while everybody is holding on to their Bitcoins, while we starve the financial systems, the government will either do one of two things. They'll either have to go back to gold or just continue to subsidize the financial system. They'll have to do more of what they're doing now, crazy money printing. And then whatever we're holding will go up in value, and we're hedging against their stupidity. So what people have to do is they have to create a parallel system where, as the governments go further into a crazy policy, that ultimately you're holding something that's a hedge against their systemic stupidity. And again, it's not a Republican, Democratic, it's not a Trump,
it's just a
Biden,
yes,
Hillary.
Yes.
So, they're all very similar. Their rhetoric is the difference. The rhetoric is very different, but the policies are not significantly different. So just the way they talk is very different.
So pretty much
that's just to keep us distracted.
So do not participate in the financial markets. So dry out the leverage, pretty much, right? So go gold,
yes.
Go Bitcoin. Here's a question. Currently, the holdings of gold are also kind of monopolized. Same with Bitcoin. I mean, it's it's not really decentralized as we would like it to be. So then just holding Bitcoins and gold also present risk to newcomers against those who've been in that space for years.
Well, the problem with gold, the problem with gold is that yes, right now to buy physical gold, you have to pay a premium over physical gold. I have gold mines, so I don't worry about going in the markets. I buy gold and my Bitcoin, I mostly get the same way I mine it. So and the advice I gave to everyone for a long time was just go mine. So it's harder to now in the era of ASIC machines and where economies of scale to mining was much nicer in the beginning when there were no economies of scale to mining. So it's a different business now than it was at the beginning. But still, it's not decentralized. Anyone can buy Bitcoin. It's cheap to buy Bitcoin. So I think it's cheap to where, I think it will go. So I don't think the issue, there's no barrier to entry to getting a Bitcoin. So for many things, there are barriers to entry. So I don't view it as centralized. I just think certain people have made decisions to hold higher sums of money, but they're not more privileged. They just made bets earlier. And I told a bunch of my friends in the beginning, in 2009, 2000. Once it became easier for people to get, once you didn't have to mine it, once people became easier for people to just buy it, I started telling all my friends to go buy it. And when I told my friends to buy it, it was sitting somewhere between $5 and $10. And I was able to convince a bunch of my friends to buy it. But I can tell you, every friend of mine that bought it, by the time Bitcoin hit 100, they all were out. Okay.
Absolutely, 100%.
And they all got out. So nobody, so somebody went in and then got out. What can you do about that? I told them, I tell everybody, buy Bitcoin. Don't look at the price for 5 years. Okay. Assume that you have a minimum of a 5-year holding period. Don't think about trading it. Think about holding it, and don't buy more than you can afford to lose. It could go to zero. I don't think so, but nobody should be crazy and go and put all their life savings into it. Now, I think gold is not going to zero.
Jeff,
gold is not going to zero.
Stupid question. I mean, everybody's asking this question probably, and I actually got to ask this question as well. What is then the theoretical price? What's your expectation on the price of Bitcoin? I apologize for this question in advance. I know it's very stupid, but still. I mean, right now it's what, 10 grand roughly? Can it go any higher from here based on what you see, based on this limited supply after the halving and all this other fun stuff?
I'm not a short-term pricer, and I don't think anybody should think about short-term pricing. I can tell you that what I can say is I've never sold a Bitcoin, and I'm not close to even thinking about selling a Bitcoin. So where its potential is at, I know I have one friend who, did this elaborate study, and his estimate is about $500,000. I now know that what's his name, McAfee, has now said nobody should have taken his $1 million forecast seriously. So he doesn't have to eat his own dick because he was not a serious forecaster. So I think you have to buy it and hold it based upon your expectation that it's going to be the last man standing, as I don't mean to be sexist there, last currency standing. In a world where people will lose faith in any other alternative form of money. So that it has the best protocol, and that it will be the dominant protocol once we reach, the end game of fiat, and every fiat regime has failed. Currently, there are more mechanisms of sustaining fiat as a zombie for a longer period of time. If you look at the performance of the British economy came out of World War I pretty weak, yet the pound sterling was still the reserve currency of the world, for another 35, 40 years. It wasn't until after World War II and the Bretton Woods regime came about did the pound sterling lose its reserve currency status. So it was a zombie economy for 30, 40 years and still preserved itself as the world currency. And they preserved it pretty much the same way did. The British colonized the whole world, so they used the pound sterling because Britain colonized the whole world. We colonized the whole world with our military. So So if you drop our currency, we'll kill you. So we colonize similarly to what the British did. We use our army to enforce the dollar as a reserve currency of the world. So we could be declining economic power, but our military power will outlive for a period of time, our economic power, and that military power will be used to preserve the dollar as a reserve currency of the world until that military power becomes not able to impose a hegemony all over the world. So when that happens, the dollar will lose its status, and I don't believe anything else will replace it other than Bitcoin at this point in time.
Question about Bitcoin. So one of our lead developers actually from the Russian region, it's about 2 a.m. over there. So the question goes like this, right? So let's assume Bitcoin. I mean, I'm a huge, obviously, believer and supporter and etc. of the crypto movement. Let's put it this way. But let's assume Bitcoin wins out. Then what to do with ISPs? What to do with AMD, Intel, and all these other hardware providers who control pretty much the mining anyways? So let's assume Bitcoin prevails. It's still potentially going to be a corporate-owned environment. What are the risks? How to resolve those risks? What needs to be done to minimize those risks?
No, I think there's still limited barriers to entry. So I think if what I can count on is the fact is if Bitcoin price starts rising above, what it costs to mine significantly, I can sound that that'll be a lot of new entry into it. And as new entrants come in, so I don't know how much of the current price has not risen a lot because miners are consolidating even more power, so that as when it does go up, they'll capture a significant amount of the benefit of that appreciation. So, I don't know all the gaming of all the miners going on right now, but what I do know is that when prices move, people change how they allocate resources. And as once more people believe Bitcoin will be a reserve currency of the world, the more innovation we'll see and the more competitive intensity we'll see in the market. So I trust that process. The market structure today is not inevitable. Okay, the market structure will change as pricing changes. Going back to decentralization, though, that's a point that I'd like to further touch on in the few minutes that's left. This is another way where the government fuck us. Okay, if you take a look at when Uber did its IPO, and in the documents Uber said we might never make a profit. WeWork, all these businesses, they don't really know what their route to profitability is. So right now, normally when I have in the gig world, okay, and more of the world is a gig world, okay, in a gig world, I can't share value with my gig workers, okay, because I can't decentralize the value sharing process. If I wanted to create, an Uber token and compete with Uber, so I want to create my own competition. I want to decentralize, and I wanted a proof of work system. So if you're a driver, the more miles you work, the greater reviews you get. I come up with this metric. The metric's transparent, and then the metric is accepted by all that enter the system, and that instead of accumulating dollars and dollar sharing, they accumulate shares, and they get shares in the upside of the company. What if we happen to the average Uber driver? Many Uber drivers don't even earn minimum wage now driving.
Not anymore. Yeah.
So they don't have a minimum wage, yet Uber went up a lot in value. Normally when you're employed, you get a stock purchase, and you get a stock option agreement, you get some other benefits. So as the company does better, you get better. In the gig world, the company gets better at your expense. So if somebody wants to arbitrage that, the way to arbitrage that is to build a decentralized ecosystem where you can now distribute value to all the people, so that now they have skin in the game, and their incentives are perfectly aligned with you, and they share in the upside with you, and they're no longer gig employees, they're partners. Well, the SEC does not allow that structure. So the SEC puts restrictions on how we organize economic activity, and then the Fed subsidizes those firms that organize themselves in the way the SEC says they want to rule themselves. So the whole system is rigged okay, to fuck most people. So we can't see a decentralized world until we see a system where you can decentralize value and not call it a security. And I don't understand why the crypto world has not fought this battle. Instead of just saying this is a utility token, what the crypto world should be fighting is the designation and the concept of how can we share value with people that are not employees and not call that a security subject to being having all the registration expenses associated with it, so that we can really build a true. Why do we have to organize ourselves inside the context of the firm? And why can't we have other people who voluntarily enter and exit a system at their own free will, and why they're in their free will that they can't on their own determine what is the optimal form of compensation between them and the ecosystem they're operating under? So nobody is pushing this. So this is what we have to push. We have to push the government to allow us to decentralize value, and they are currently resisting that. And not enough people are speaking up on that behalf and saying is, fuck this way of this corporate organization stuff. Let us have true economic freedom. So the government is preventing us from having economic freedom, and we should start screaming about that fact that we are being prevented from doing so. Decentralization is a great threat to government. We can't sit passively by while the government is taking greater control of our lives.
100% agree. 100% agree. So a couple announcements. We have a couple of minutes left. Thank you everybody for watching. So right now in about 2 minutes at 7 p.m. EST, there's another podcast on the developers mode. So just tune in, just stay here. And also tomorrow at 7 p.m. Tomorrow is Thursday. There's going to be a discussion regarding the modern store value, what pretty much Jeffrey just mentioned. So to be honest, this is the third or fourth podcast I'm doing with Blockchain Center, Anna Ginsberg and Nick Spanos. Thank you so much for organizing this, and the team, Scott and Erica, all of you guys. Thank you so much. This podcast in particular was like a breath of fresh air. I finally did not have to argue with anything that, in this case, Jeff, you had to say. It was purely on point I purely coincide on the views regarding what the government is doing, what the governments are doing, and what the potential course of action is. Question is, Jeff, we didn't cover lots of things: the big short, the dollarization, the unicorns, all different ways of investing. How the decentralized structure in society has to really be created and constructed to make it self-sustainable. If you are down for the next week, say 6 p.m. same time next week, next Wednesday, and the audience kind of likes this topic, then what would you say if you continue the same interview process for 1 hour next week?
If people are interested, I'm happy to reach out.
Absolutely. They're just like firing up in the chat everywhere. I'm only seeing the portion of the chat. I'm not seeing all the questions, but there are lots of very interesting questions. People saying preach. People are fully agreeing with what you have to say. Amazing. So same here. All right. Okay. Thank you so much. I think we got to wrap this up, Jeff. It was a pleasure. Thank you very much for your time. It was very, very informative. Thank you so much. Thank you so much.
My pleasure.
Cool.
Thank you.